Yields at the fixed income market were broadly higher this week, but eased slightly today as investors await the implementation of the CBN's new cash reserve requirement on banks' public sector deposits on August the 7th. Meanwhile, at the FX market, the Naira came under pressure once again as higher demand crept back into the markets. Now, Bankole Odusanya, fixed income trader at UBA, joins me now for an overview of trading this week. Thank you so much, Bankole, for joining us.
Thank you.
Now, we saw, of course, yields rising this week and, of course, the outcome of that MPC being a major driver for markets. But just run us through your own take on market trading for this week and perhaps direction for yields going forward into the new week.
Yes, basically, what we saw was that immediately after the meeting on Tuesday, we saw a sell down from most speculators via the ICAP. And then the next morning on Wednesday also, it was very bearish market. And what had happened immediately after that was that, of course, for those who just short sold, they covered and market has stabilized a bit. On bonds, basically, yields have moved from 13.3, 13.4 levels to 13.8. That's week on week if we check Friday to Friday. It's been bearish marginally, even though we're seeing demands from PFAs and some portfolio investors because the yields remain attractive at certain levels. For bonds, it's at 14% or marginally lower. Whenever bond yields tend to 13.9, 14, we see investors picking up. So they're still active, not just as it was in January, February.
Okay, bond yields at 14%. Is that going to be sustainable next week, or what could be a major game changer for yields?
Yes, next week we're going to see a bearish run continue. What happened was that immediately after the announcement, people thought that the implementation was going to be immediate, but definitely it's now obvious that it will commence, or the implementation will be carried out next month. So of course, between now and next 14 days, there will be plans on how to get out on certain positions in security and FX. For speculative positions in particular will be reduced, and just to fund these obligations that will come in next month. And basically, even though we're expecting a bearish run, position taking will also occur. Some investors or counterparties would sell to buy back. That would play out, and then I know that there are demand for bonds at certain levels, and for T-bills they remain attractive also. If you look at the primary auction results, the amount on offer was just over 100, and the demand was ×3, over 300 also. And the rates didn't go AY. They were not far from what they stopped at, except for the 1 year that closed at 13.3 levels, basically.
Okay, Bankole, let's quickly...
The demand is there despite the bearish sentiment that the dealers are expressing.
Let's quickly talk about the Naira, the strength of the Naira. We know that one of the reasons why the MPC took that decision at the meeting was to help, support the Naira, and of course expectations that going forward, at least in the short to medium term, the Naira would strengthen. But we're not looking at that, and Naira is still weakening to around 161. Obviously, still pressure on the Naira. Now going forward, what band do you see the Naira trading, and is this pressure going to be short-lived, or do you think the central bank would intervene directly at the market?
In the next 14 days, the Naira will definitely either hold up to firm up at 160.50 levels or strengthen further, because immediately after the announcement, we saw the Naira get back to 159, even though when it became clear that implementation will be next month, like I said, we saw people who sold buyback. Of course, it could be speculation, basically. And we know that the demand is still very, very high. CBN sold 600 this week. We had Total and Shell coming to the market. As we speak today, NLNG sold some money too. So initially, the Naira opened at 161, but closed at 160.50. And basically, going into next week, like you said, it's going to be a firm up for the Naira, marginal strength. But going forward, the demand will see us pull it back to 161.
What about going forward into the new week at the Treasuries market? We know that there probably will be less participation there by the banks. One of the things the central bank was trying to achieve anyways. But what is your outlook for the market next week?
The outlook for securities especially is that there will be sell down on some positions. For those that are profitable, we've seen people take profit. And what's happening is that it's nailing off. it's like an equilibrium. We see people demanding bonds at 14, and 13 is still very good for long-term T-bills. So for those speculators selling, we have demand matching it at the other end, basically. But week on week, it's been higher yields, and we expect this to continue going into the next 1 or 2 weeks, and then stability would come in afterwards.